Hello, this is Manish Patel from ichimokutrade.com. Today is August 16, and what we're going to do is we're going to go through a trade review for a trade that we closed out Friday, and we actually turned it into a positive trade with options. It actually was negative up to this point. We're actually correct in the direction of the earnings announcements for the trade, but unfortunately it went below our support level, and at that point the option trade was pretty much close to max loss. We actually ended up turning it positive due to time. So what we're going to do is we're going to review exactly what happened there and show you how you could sit there. As long as you understand options, you could take a losing trade and turn it into a positive or even break even. Okay. Before we go for the details of it, go for our normal disclaimer to state this is for education use only. We're not soliciting you to buy or sell any particular instrument. All the information is owned by EII Capital Group, cannot be distributed without our permission. Today what we're going to do is we're going to use thinkorswim basically to show the option chain, to show the actual live order in our student account, and to also show you the charts with thinkorswim. Okay. So let's go straight into the chart. One of the things in Options University that we do is we teach a strategy called pre-earnings. So what we do is we predict with Ichimoku as the indicator and with all the other things that we teach in the university program, how and which way the direction of the stock can go based on earnings. A day before earnings, or maybe even a week or 2 weeks or 3 weeks or 4 weeks before earnings. And this is the case for this. You could see here, this is the stock LinkedIn that we're dealing with. Remember, we're dealing this with the options to minimize our risk and so forth. This is a $200 stock option too, so that's definitely one that you want to sit there and use options to minimize your risk. So here you could see what happened here from a technical chart. You could see here price went up, held this green line resistance here, and kind of bounced off there and was starting to go down here. Okay, if you look on a daily time frame here, what it is right here, right before earnings, you could see price right here being held by this resistance here, roughly around 228.55, and it was holding, and the day before earnings, you could see here, it was holding here too. So there was a high probability of this stock particular going down on earnings and possibly to this support here, which is around 217, or worst case in our when we were looking at this was about 203. So worst case for us was that the stock would go down to $203, and then it could bounce off there, maybe come back and retest the resistance, and later on sit there and start to go down. So what we're predicting in August is that it comes down to this worst case level, but after earnings, or even a couple of days or a couple of weeks after earnings, come down to this support level here, hold it, and then kind of bounce between this range and that range. And that's kind of what we're looking for, is a option trade that covers us where we can make money, where the stock tanks from here, comes down to this level, and somewhere in here by mid-August at the option expiry, it expires to a point we can make some good money. Okay, you could see here it didn't hold, it came to our support here on the day of earnings, held it, so we're pretty happy. It kind of got there really fast compared to what we're expecting it, but then what happened was, since it got there really fast, broke that support and came down here to another level here. So this broke the support level that we're looking for. Okay, quickly let's go look at the risk graph here. You could see the trade that we put on here. You could see that basically we sold the August 15, these are monthly 215 puts here, and then what we did was we bought the August 4 weekly options for 2015, and net this cost us $65 a contract, or 65 cents a contract. Okay, we're showing this in our student account. Reason why is in our student account we show you exactly what you can make with one contract. Reason why is every one of our students are different, with different risk management levels, so everyone trades with different risk per per trade. So by showing you one, it basically means all you do is adjust this quantity to whatever your risk per trade is. But this was basically $65 max risk here, and look at the red over here. If it comes here to about $215 by August 22, the maximum profit is $525. So this is going to look like a very, very good reward risk ratio. Worst case, if it kind of hovers around $200 a share at expiration, we still walk away with $44 in profit. So this kind of covered us where we're going to make money anywhere from here to here, we were going to make money. So that calendar basically covered us to that range. Now, we looked at basically buying puts. We did not see anything for any of the expiration months, monthly expiration months, or weekly, where basically volatility was average or low, so the options weren't cheap or average at all. We looked at vertical spreads too. We really didn't see a good reward risk ratio, so we reverted to the calendar. Reason why the front month options had a high IV and the back end basically had low IV. And you could see that we really didn't sit there and go out a couple of months later for the back end. It was actually dealing with a weekly and a monthly. That's the only way we found a possible trade with this. Okay, you have to know what you're dealing with options to be able to do this. You could see here basically what happened is that now that it tanked, you could see here we're going to lose our max, pretty much everything that we paid for in this. So what we wanted to do was that we see that this trade right here is turning to be negative, where we're going to take max loss by August 22, which is next week. So what we wanted to do Friday was to figure out, is there a way we could sit there and take this trade that's going to be basically at max loss next week and turn into get close to minimize our loss, get to break even, or even low profitable if we can. So what we did was we looked at the 30-minute chart here, and what we noticed is that after it tanked, it never really got above the cloud, which is where the sentiment's bullish. In order for it to get back to the 202 level or the 215 level, it had to get above the cloud on the 30-minute, which is our lowest day trading time frame here. And you could see here it got to this resistance level here, kind of held it at 190 and doesn't seem to break it. So our probability was low on it going back to $200 a share. Okay, so what we wanted to do was, now we wanted to figure out Friday, before we go into this weekend, how we could turn this trade into being positive. So what we ended up doing was close out each individual leg of the option trade at different times on the technical chart in order to sit there, get back to break even. And if we go to my monitor tab, which shows the actual trades and everything, you could see here this was basically July 30th, 2015 at basically around 2:29 Eastern Standard Time is when we bought this calendar spread here for 65 cents to $65. And you could see here we started breaking each part back, and we did that reason why the spreads between the bid and ask were big. So based on technical charts off the 30-minute, we started positioning different started buying back each of this leg. So this right here, this buy was basically buying back this sold leg here, where we sold this 215 here of this option trade here. So this is the monthly option that we bought back first, and the reason why, that's the one that's the most risk here. So we took that naked put right there, which was a -1, and we basically bought that back first, and we got it for $25.52 when we bought it back. And then what we did was we put an order for the weekly options to close out the buy leg there, so we're going to basically sell it here. That took a little while, as you could see here, and the reason why is the technical charts were here, and then it needed to pretty much go down, and at some point in here is when it basically filled. And the reason why is, remember, there was a huge bid and ask between, there was a big spread between the bid and ask, and that's kind of reasons why. But if you look, we basically sold it for $26.52. So if you take $26.25 and then subtract it from $25.52, you look at that net, we basically walked away with 71 cents. Basically we got it back. So if you look, 71 cents, we covered our 65 cents that we basically bought it for, and we got about 6 more cents to cover our commissions. So net this trade, we walked away with basically breaking even, and that for us is good. Remember, your winning trades really don't matter. It's what you do with your losing trades. With options, as long as you have time on your side, you have the ability to take a losing trade and turn it into break even, close to break even, or a little profitable, as long as you know how to read the charts and you understand exactly how these options work. If you don't understand that, then you're going to have a very hard time. These are some of the things that we teach in the Options University, is how to sit there, take these trades, and look at each individual piece and understand the Greeks, so you know how to sit there and do exactly what we did here. Hope you guys had enjoyed it and learned a lot. If you guys have any questions, you could give us a call here, any of our phone numbers down here, or you could email us here. Have a good day.